I'm going to go right to Tim Ward. Tim, how are you?
Good. So, how is your Tuesday?
So far, the Tuesday's been very good, but I also want you to, before I even forget and we run out of time, Tim, can you tell the listeners how they can reach you and just exactly what you do?
All right. My email address is tim@ord-oracle.com. My website's www.ord-oracle.com. I have a Twitter, which is at Oracle. You can just get there. I'm also on a what do you call it, Snapchat or something too, I guess. My daughter kind of signed me up, so I'm on that. But anyhow, that's how you can get a hold of me. So let's get started on the market, see what we've got going here. I did this earlier today. This is the daily SPYs, and it's different than what this is right now. But normally when the day starts out like this is probably this a couple hours ago, but I just took this quick reading. But the trend was right around 1.17. I don't have a reading right now. We had about 553 downtick readings. That's just this area had support. So I listed in the areas in pink before where you get trend closes above 1.2 and downtick readings below minus 200, and they all kind of come in the same region. You got to pop out of this area into this area, then it got bullish again in this area, then rallied up. And pretty much over the last couple of weeks, we haven't moved much. We kind of just went sideways between 655. That's what it looks like. Can't quite read that 665 up there. Anyhow, we're kind of in between a trading range, or we're kind of moving sideways. But it looks like normally if you get a reading, it kind of stays into bullish territory on the trend of 1.2 or higher, and downtick readings kind of consistent all day. Normally they close in that vicinity. So we got a support area here, even though we're not even, I thought we might pull back down to 650 area. I don't think that's going to be the case. For some reason, we're finding support in this vicinity right here. So we'll see how that turns out on the close. And this was interesting too, this next chart. This is the top window is the VIX, SPY to VIX ratio, and next window lower is the SPY, it's the daily. And market rallied, and the VIX kind of went down, and you got a pullback for several days. And on that pullback, the market rallied up, and even though we haven't hit a new high when I made this chart, the VIX, SPY VIX did. So you got, so evidently, and I labeled this here, there also the VIX and trend when I did that a couple hours ago. And so there appears to be some support right here, right now, which is kind of odd because we're not even near, I thought we'd get down to a little bit lower level. I said 640 to the 650 range down in this vicinity. It doesn't appear that's going to happen because we're starting to get panic right here. And we got a SPX VIX ratio bullish divergence. So we'll see how the close goes, but anyhow, there is support in this region right now. I'm neutral right now, but it depends how the close go. I might actually get along here, so we'll have to wait and see. Let's flip over to the gold market. I flipped. This market's really just strong, and it's outperforming pretty much all the other sectors. I don't know if another sector is actually this strong. I'll put it that way. But the top window is the monthly HUI. Next window down is the monthly HUI NDX. So you're looking at the gold stock market compared to the NASDAQ market. So you're doing a comparison. When this ratio is rising, then HUI, gold market, is outperforming the NDX market. When it's declining, then the index market is outperforming the gold market. And it does appear there's a 12-year cycle. Last time, matter of fact, we matched lows with lows, just almost right on the money. 24 years ago, we had basically the same low. So anyhow, but there does appear to be a 12-year rally as 2000. The gold market really ran strong from about 2000 to 2012, then extremely weak from 2012 to 2024. Kind of went sideways here for wasn't really weak, but went sideways. Now we got strength again. And how do you can determine what goes on? Will the gold market remain strong again? Possibly over the next 12 years. I don't know how the time frame, but once you get the RSI of that ratio way above 50, we're almost like 70 right now. And that's usually initiation of strength off of a bottom. And so that once you get that initiation, normally it continues. The last time we had the RSI stay above 50 was pretty much from the 2000 low to 2012 high. Then he got weak. Then the RSI stayed below 50 going into 2012, from 2012 to 2024. Now, you hit almost 70 here on this RSI, so I'm thinking there'll be consolidations along the way, but this ratio will probably, in general, stay above 50, in my opinion, probably possibly another 12 years. So this gold market, I think, is still in the early stages. Me and Tom talked about this actually a couple of years ago in 2023, I think it was. I thought this big gold market was starting to happen. I think it's happening right now. So I thought that was kind of important. Kind of want to repeat that. There's a lot of penny stocks in the gold market. So some of those penny stocks will turn into dollar stocks, if not more. So we'll see how that goes forward here. But here's the music.
Yes, here's the music. I just wanted to mention on the chart that you're showing, that huge cup formation, the higher it goes above the left side, the stronger it becomes. So that's very important. Thank you for mentioning us. I'll be back, folks. We've got Tim Ward on the line, and this is Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. Dow's up 37, S&P's up 18. We'll be right back. Hi, folks. We're back. Basil Chapman sitting in for Tommy O'Brien. This is the Tom O'Brien Show. We have Tim Ward. He's been discussing the S&Ps, the perspective of the S&P and the GDX and gold itself. Actually, you went mostly in gold. So, Tim, could you continue, please?
Yeah, we kind of showed this chart before. This chart goes back to 1982, and from 1982 to 2008, basically the XAU gold ratio, which is basically it measures the gold stocks compared to gold. And so when the ratio is higher, that means gold stocks are expensive compared to price of gold. When it's low, gold stocks are cheap compared to price of gold. But anyhow, this ratio pretty much traded from 1984 to 2008, trade between 0.17 to, give or take 0.35. So it bounced around that trading range. So normally when you get above 0.35, you're kind of in this area. When you're below 0.17, you're down below this area. So it kind of helped pick out the highs and lows of a gold stock. So you can kind of see where the lines are there. So this high or low area. So anyhow, this area, for some reason, gold stocks kind of kept cheap. But anyhow, over the last 2014 to current time frame, this has stayed between 0.05, give or take, to 0.08, and which is super cheap. Even though the market has rallied here a little bit, it's gone up. Now we're just going through the ceiling here, but this ratio is still. I want to point out here, this ratio is going sideways for about 10 years now. This back here, 1984 to 2008, is about 25 years. But I'm thinking we're going to break out of this trading range for 10 years because we're super cheap. Matter of fact, I have this chart going back to 1913, and anything below 0.10 or 0.10. Has been cheap according to history. We're half that. We were half that at one point. So even history is 0.18 cheap. So I think we're going to break out and actually go up to probably the lows of this pattern, because previous trading range lows are resistance, and that's at 0.17. So I'm thinking gold stocks, even though gold will perform, I think gold stocks is going to start out performing gold for the next several years. So we'll see how that happens, but I'm thinking we're going to break out. This ratio at 0.08 is not going to hold it back. It's actually going to go higher. So what I'm trying to say is gold stocks, I think, are relatively cheap yet, and I think that the rally in gold stocks is not done. I think we're looking at something what happened in 2012. I think we got something like that going on. Here's another chart that kind of says this rally is probably has further to go. The bottom window is the 18-day average of the up-down volume. Next window higher is the bottom window is 18-day average of the advanced decline. Next window higher is the 18-day average of the up-down volume. And this chart goes back to 2014, and every time it got above 40 on both those indicators, which that's where these lines here happened, and it shows you what. Actually, we had this twice happen over the last couple of months. I had one in mid-August, and another one's mid-September, so it kind of had a double sign of strength, I'm going to call it. But once you did that, the market still rallied for another 6 months. This one's the least one, only rallied 3 months. But anywhere from 3 to 6 months, once those signals are triggered. So at minimum, it should rally to year end and possibly could rally to next March. Don't know. But my opinion, this rally's not done yet because we have a sign of strength off of... we actually have a sign of strength where everything's really participating. And I did another one, which is a little bit longer term. And instead of an 18-day average, I used a 50-day average of the up-down volume. And kind of similar situation, not as many signals. This chart goes back to 2010. And we only got 2 of them before. We had one in 2016 off of that rocket up, and we had another one off 2019. So one lasted 5 months, the other one lasted 1 year. But this is a 50-day moving average, so it's a lot bigger time frame, which in my opinion carries more importance. Anyhow, we did hit like 30 on those previous 2, and we hit just right at 30 on this one. We're currently at 27.5 right now, still strong. Excuse me. So this suggests that we got either 5 months or a year to go. It depends how you look at it. But on a 50-day average, with that much strength going into the gold stock market, I think we're still early in the game for this rally to continue, even though we'll have some consolidations. The consolidations, I think, are probably going to be fairly mild. So, anyhow, I'm still bullish on gold stocks. I don't think we had a top of any consequence, at least not yet. And that may change, but gold stock trend is still up. Doesn't say anything about gold, but gold has really done well over the last couple of years, where gold stocks has kind of rallied. Now I think they're playing catch up. So we'll see how long that catch up goes. But I still think we're in the early stages of this bull market. I think a lot of money to be made yet. So anyhow, that's my analysis here. Do you have any questions or?
I do have a question. In the chart that you're showing, there's this huge bowl formation, like a flat cup. And do you have any perspective on the way your ratios work as the price, in this case of the GDX, breaks out? What would you expect?
This huge bull, are you talking about a cup and handle thing?
The indices you're looking at now continue higher. You expect that the GDX will turn the left side lip into a support level and just push higher?
I'm thinking this whole thing is William O'Neill's cup and handle thing. If you want to go read about it, or your listeners read about it, you get these great big cup and handles. It works on a daily chart. This is a huge cup and handle. If this is the cup, then you got a handle that kind of goes sideways for probably a number of years. But I don't know if that's actually what that is for sure, but you're asking me where GDX is actually heading to. The only clue I can say about that is we'll probably GDX will stop going up when this ratio gets to resistance, which is that XAU gold ratio. It gets up around 0.18. Wherever GDX is at that time will probably be a resistance, because that resistance line was something like 20 some years. So that 1.1, 0.178 or 0.18 round off numbers is going to be a big resistance, but we're a long ways from that right now. I think we're coming in still below 0.7, I think. So,
well, that's a fantastic analysis, Tim. I really appreciate it. I think our listeners appreciate it. Folks, don't forget, you can go to Oracle and check this out. And thank you, Tim, and we'll see you on Thursday afternoon.
All right. Talk to you then. Thanks a lot.
Thank you very much. Folks, the Dow is up 46, S&P's up 21. Basil Chapman sitting in for Tommy O'Brien. I'll be